Welcome to our podcast, where we believe that understanding the world of finance is essential for everyone. Join us on this journey as we dive into the fascinating realms of digital money, cryptocurrencies, and central bank digital currencies, or CBDCs. We are here to equip you with the knowledge you need to navigate the future of currency. Make sure to subscribe for our free educational content that empowers you to stay informed and engaged in these crucial topics. Digital money is revolutionizing how we think about and use currency in our everyday lives. From the moment we wake up to when we go to bed, the ways in which we transact and save money are evolving rapidly. At the forefront of this change are cryptocurrencies like Bitcoin and Ethereum, which operate without a central authority. On the other hand, we have central bank digital currencies, known as CBDCs, which are government-backed digital versions of national currencies. In today's lesson, we'll take a closer look at how blockchain technology underpins these currencies and discuss the fascinating contrasts between decentralized cryptocurrencies and centralized CBDCs. Understanding these concepts is crucial for navigating our rapidly changing financial landscape. Blockchain technology is a distributed and immutable digital ledger that records transactions across multiple computers, providing a robust framework for digital currencies. This technology ensures decentralization, meaning there is no single point of control over transactions. It enhances transparency, as all transactions are visible to those who participate in the network. Once a transaction has been recorded on the blockchain, it cannot be altered, which protects against fraud. Each participant in the network maintains a copy of the ledger, making it extremely difficult for anyone to manipulate the data. Beyond the world of finance, blockchain has groundbreaking applications in various fields, such as supply chain tracking, voting systems, and even digital identity verification. Now, let's shift our focus to cryptocurrencies. These are digital currencies that employ cryptography for security and leverage blockchain technology for transaction processing. The defining features of cryptocurrencies include their decentralization. They are not controlled by any central authority, and their peer-to-peer transaction capability, which allows users to interact directly without intermediaries. Most cryptocurrencies operate under pseudonymous identities, ensuring a level of privacy while maintaining transparency. For example, Bitcoin, the first and most recognizable cryptocurrency, has a capped supply of 21 million coins, giving it a scarcity that many believe adds to its value. Ethereum, another leading cryptocurrency, extends beyond mere currency use. It supports smart contracts, enabling programmed transactions based on predefined conditions. Moving on, we arrive at CBDCs. Unlike cryptocurrencies, which are decentralized, CBDCs are digital currencies issued by central banks and backed by the government. This means they function as fiat currency, essentially digital legal tender that must be accepted for debts. CBDCs aim to provide efficiency in transactions, reduce the costs associated with cash handling, and promote financial inclusion, ensuring that all citizens have access to digital financial systems. Notable examples include China's ECNY, which is currently being tested, and Nigeria's eNaira. CBDCs aim to provide some of the conveniences associated with cryptocurrencies while maintaining the stability and trust associated with government backing. Understanding the distinct characteristics of cryptocurrencies and CBDCs gives us insight into how different stakeholders approach digital money. One of the central differences lies in who controls these currencies and how they stabilize value. Cryptocurrencies are subject to market forces like supply and demand, and their values can fluctuate wildly, often creating a speculative atmosphere. In contrast, CBDCs would aim to provide stability similar to that of existing fiat currencies because they are government-backed. Another key consideration is privacy. Transactions made with cryptocurrencies can vary in terms of the level of anonymity they offer. However, since CBDCs are linked to government infrastructure, they may have less privacy as governments could track and manage transactions. Regulation is another significant factor. While cryptocurrencies often face uncertain regulatory landscapes, CBDCs are inherently designed to be regulated, paving the way for greater consumer protections and systemic stability. Both cryptocurrencies and CBDCs come with their set of benefits and challenges. Cryptocurrencies bring advantages like financial inclusion for unbanked populations, lower transaction costs for international transfers, and quick processing times. On the downside, they often face extreme price volatility, security concerns due to hacks and scams, regulatory uncertainty, and potential use in illicit activities. Meanwhile, CBDCs can improve transaction efficiency and support direct monetary policy but may also raise concerns over privacy and cybersecurity as well as bank disintermediation, where people prefer holding CBDCs over traditional bank deposits. The ongoing discussion around these topics highlights the many trade-offs that governments and consumers must consider as they navigate the evolving landscape of digital currencies. As countries respond to the rise of digital money, their regulatory approaches have varied widely. Some nations, like the United States, United Kingdom, and several in the European Union, have embraced cryptocurrencies with frameworks for their regulation, while others, like China, have moved to ban them. In contrast, the development of CBDCs is gaining traction globally, with China leading the way with its ECNY. Other countries are in the research or pilot stages, and some remain skeptical about implementing such systems. Regulation involves key issues such as consumer protection, anti-money laundering measures, fair tax treatment, maintaining market stability, and ensuring national security. Notably, organizations such as the G20, International Monetary Fund, and the Bank for International Settlements are working together to develop coordinated approaches to digital currency regulations. Looking ahead, the future of digital money is uncertain, but analysts predict it will be transformative. We might witness a coexistence of cryptocurrencies and CBDCs, with each serving different purposes. It's also possible that CBDCs could establish dominance as the primary form of national currency, eventually replacing cash. Alternatively, cryptocurrencies might gain mainstream acceptance and become regular payment methods. We may even see a hybrid system that incorporates both government-issued and private digital currencies, catering to diverse needs. Several trends paint a picture of what the future might hold, such as continued digitization of payment methods, declining cash usage, ongoing blockchain technology evolution, and increased global cooperation on regulatory matters. What does this mean for us as individuals? We could see changes in how we store and transfer value, along with potential privacy trade-offs. It raises the bar on our need for digital literacy. The ability to understand and operate within this new financial ecosystem will become increasingly essential for everyone. In summary, the discussion around digital money, cryptocurrencies, and CBDCs reflects a rapidly evolving financial landscape where traditional ideas about currency are being challenged and reshaped. Key takeaways from our exploration reveal that digital money comes in various forms, with each possessing unique characteristics. Cryptocurrencies bring decentralization and independence but face volatility and regulatory uncertainties, whereas CBDCs provide a stable, government-backed option but raise privacy concerns. As we conclude, it's clear that the financial landscape will continue to evolve, and staying informed about these developments will be vital for participation in future economic systems. Understanding the distinctions between these forms of money and their implications helps us make informed decisions as we move forward in the 21st century financially. As we reflect on today's conversation, we've seen how digital money is reshaping our understanding of currency. We explored blockchain technology, learned about cryptocurrencies and CBDCs, and examined the benefits and challenges associated with each. The differences in regulation and control between cryptocurrencies and CBDCs highlight the need for a balanced approach to digital finance. Staying informed and engaged with these financial advancements is not just beneficial, it's essential for our participation in the future economy. Remember, the future of money is being shaped now, and your understanding of it will empower your financial decisions tomorrow. Thank you for joining us for this insightful episode on digital money and the future of currency. We hope you've gained valuable knowledge to help you navigate the ever-changing world of finance. If you enjoyed today's discussion, please subscribe and share our podcast to spread the word about the importance of understanding today's financial landscape. Until next time, keep learning, stay curious, and take care.